Good morning and welcome to Join the Dots. Now, this morning I'm going back to my core mission here, joining the dots. And I'm going to give you two extremes in the American economy. I'm going to give you McDonald's and I'm going to give you Las Vegas. And what are they both saying? This is the important thing. How do you join these dots? Okay, so first of all, we start with McDonald's and we start with our friends at Eurodollar University. And I honestly can't encourage you enough to go and look at Eurodollar University. Jeff Snyder does a tremendous job with statistics and data. Okay, he does a tremendous job. So what are we learning about McDonald's? Well, we're learning that less Americans are going for breakfast. And it's not just McDonald's. Wendy's have got the same problem. So it's telling you something that's wrong, isn't it? Because if something changes as fundamental as people having breakfast, something big must be happening behind the scenes. Okay, because you don't change your habit of a lifetime just randomly. You do it for a reason. And I'm going to tell you that reason is jobs and income and debt. But let's work through it. So we see Wendy's are suffering on everything, not just breakfasts. Their global sales are expected to be 3 to 5% down this year. Now remember, food inflation is rife. Every presentation I've done almost talks about food inflation because it is out of control. It's out of control, but it's hidden in the data because they'd rather tell you that laptops haven't gone up or cars haven't gone up. Food is going up, and that affects more people than the price of a laptop or a car. Okay, it just does, because everyone needs food. Might be a millionth of 1% of Jeff Bezos's budget, but it might be 40% of an average person's budget. Food. And those prices are rising, and that brings in the Cantillon effect. And the Cantillon effect is most affected by rising wealth inequality, which is systemic across the globe. Rising wealth inequality. So here we see even McDonald's and Wendy's are being affected. The link is down below. I'd encourage you to watch it. I really would. We're going to link this to gold. We're going to link it to silver. We're going to link it to everything. I'm joining the dots for you. So we move on from McDonald's, which, as I say, is all about jobs and income. People don't change a habit of a lifetime for something that's passing. No, they do it for something fundamental. Something fundamental is happening here. We move on then to another link, and it's a new site. And honestly, as I've told you before, I surf the net. I find some incredible sites. I have to test them and test them and test them to see if they're reliable. But in the end, I can see who's telling the truth and I can see who's just politically led. So I looked at Vegas, and this is a site called, what's it called now? I'll have to check on that. I think it's called Established Context. Anyway, the link is down below. It's my handwriting, I can't read. Okay, now, this is incredible. This is Vegas. And I'm going to show you now how other people join the dots wrongly. They can't join the dots properly. Okay? Because it's not long into this presentation before they concentrate on the lack of Mexican and Canadian visitors to Las Vegas. So you can see the political context here. Trump. Trump is hurting Canada. Trump is hurting Mexico. Mexicans are saying, we're not going to Vegas. Canadians are saying, we're not going to Vegas. No, that's joining the dots incorrectly. Okay, what's happening in the Canadian and Mexican economies? Well, they're in a downturn. And they're both showing signs of incredible fragility. Canada particularly has a housing bubble of enormous proportions. And I was watching 3 or 4 videos yesterday which told me that in places like Toronto, property prices in Canada are plunging. okay, 20%. This is very serious because wealth, property is all about wealth, and wealth is all about comfort and spending as well as having a job. And when your job is threatened and the price of your property starts to fall, you know where this ends. 2008, 2009, the subprime crash, I nearly said then. Okay, it was a crime, wasn't it? So this is all about economy. It's all about the economy, stupid, as they say. It's all about the economy. It's not about politics. The report was on CNN. It's politics. No, it's the economy. Canadians have less money. Mexicans have less money. The Mexican economy is really suffering. Public spending cuts, declining remittances. Mexico's a country that has a lot of people working in America, and they send money back each month to their families. Those remittances are declining. Why? Well, because jobs are not so easy in America. Wages are not going up in America. So if cost of living goes up because of food and your wages don't go up, you have less spare to send back to your family in Mexico. Join the dots. Join the dots here. All right. So I'm going to link that one down below, established context. Please have a look because it's fascinating on Vegas. It's fascinating on all the things that are going wrong. Okay, let's have a look. 94% of people say it's too expensive to go to Vegas. Vegas visitors in June down 11.3%. In the first 6 months, they're down 7.3. So if you think the first 6 months are down 7.3, but in June they're down 11.3. So the trend is accelerating. It's getting faster. So the numbers will look even worse, third quarter, second half. Hotel occupancy in June down 6%. People are using the other casinos. They're not going onto the strip. Again, trading down. Everyone trades down in a recession. We are seeing a recession in real time. You won't be told it until after it's happened. And then it's too late to prepare for that recession because you're already in it. I'm giving you all the pointers here. I'm joining the dots to show you America is already in recession. Okay? Now the consequences of that are what we've got to handle. What else have we got here? AeroMexico flights to Las Vegas down 22%. Canadian flights, Air Canada down 13% month on month, 33% year on year. Tourism to the US is down 12.5 billion. Travellers down 22%. So what does that affect? It affects everything. It affects leisure, it affects airlines, it affects airports, it affects shopping, it affects every part of the economy. When you've got travellers down 22%, okay, join the dots, all right? Let's join the dots. And let's now concentrate on what effect does that have. Well, what effect it has is the Federal Reserve are going to wake up in September. They're going to wake up, and I think we'll see a 0.5% cut. They won't want to cut 0.5% because it panics the market, but I think they might. I would say it's 50-50 between 1/4 and 1/2, but they're certainly not going to hold. They've got a problem. They've got an economic problem in America. The recession is coming. It's here. It's showing. It's showing in these figures. McDonald's to Vegas, top to bottom, they've got problems. So what does it mean to us? Well, interest rates are going to be slashed. They're going to be slashed. They're not going to go down quarter. They're going to go down half. They're going to go down fast. What does that do to gold and silver? It makes them a lot cheaper to hold. Because one of the downside, or one of the reasons why funds and advisors have not invested or not said to people go into gold is because you don't earn any income. You don't earn a dividend, and you don't earn a dividend from your bonds. You don't earn a dividend from your companies. You don't get any income. But what relevance is that when you're earning 4.3% on a bond and gold's going up 30% a year? But that's the playbook. The playbook is we want to have less opportunity costs. So as rates fall, gold rises. And as gold rises, then with rates falling, the institutions and the financial advisors suddenly wake up. At last, they wake up. Oh, we think you should have some gold in your portfolio. Well done. Should have said that 2 years ago. Should have said it 25 years ago. From 2000 to today, 9% compound growth. Beats the S&P hands down. Okay? So it doesn't matter about your yield. Doesn't matter about your dividend on your bond. Gold, silver, these are going to benefit. And the last link I'm going to give you today is my good friend, Greg Manarino. And I do see him as a friend because this guy gives you the truth. He only wants you to have the truth. Yes, it's the truth as he sees it, and I understand that. Might not be everyone's truth, but there's no one more genuine out there. No one more genuine than Greg Manarino. And he is looking at, I'm going to link it below. It's a brilliant piece. It is paywall, but I can send it to you. Okay. Eerie similarity between 1929 and 2025. Yes, we know we've got the tariffs, but what we've also got is economies right at the very zenith. Everyone's celebrating. Meanwhile, the actual economy, McDonald's, Vegas, is falling apart in front of our eyes. It's falling apart. Rates will be slammed. Gold and silver will accelerate. More people will start looking at gold, silver, crypto. Why? Because they haven't got an alternative. Shares are falling. Bonds are in trouble. Bonds are in trouble. Government bonds are fine. They'll make a bit of money for a while. But your other bonds, your triple B or less, they will go into panic because the credit risk becomes much higher when the economy starts to slow. And therefore people say to you, oh, I'm earning 7% on a high yield bond portfolio. Yeah, but you'll lose 30% of your capital, 40% of your capital, 50% of your capital. That's the problem. Okay, so Greg's down below. We'll finish this presentation here, but remember, join the dots. Please join the dots. Don't join them politically. That's lazy, that's easy, that's an agenda-driven thought process. Join them economically. That's the truth. That's the reality. Okay? Thank you very much.